All right, so the next section I'm actually going to be talking to you guys about is going to be the memorized transactions. Okay, so this section is actually pretty cool, especially when QuickBooks sees that you're entering in a transaction over and over again. So such things like if you're getting a bill from your landlord to pay rent, right? Your monthly rent should be a fixed expense, which means that it doesn't really change. The amount's going to always be reoccurring. So that's a perfect example of why you can utilize what's called the memorized transactions. So it actually allows you to facilitate, it makes it a lot easier on your plate to enter in reoccurring or usually things that happen that occur the same way. So entering in a bill, and you can schedule QuickBooks to enter in the bill for you automatically. So that's what's really, really cool. And it also gives you that neat little feature where it can fill in the transaction for you already. So all you have to do is just change the date and change in the bill number, of course, and it will fill in everything else for you. So a good example is, again, a rent expense, right? If you are, or insurance expense. Other things you can do too is you can also memorize if you have a customer that always comes in, they're a regular customer and they buy the same thing from you. You can also memorize invoices, sales receipts, bills, and other transactions. The only thing that you cannot do is you cannot memorize any paychecks, any bill payments, or payments received. Okay. You can even memorize journal entries. So that's why it's very useful if you typically do the same journal entry at the end of every given period, and it's the same exact one that's reoccurring. So for example, depreciation, if you're using straight line, every single month you're depreciating an asset the same exact way. Well, then you can always enter that. You can always save that transaction so it works in your favor. Okay. And then, okay, but obviously paychecks, right? You can never tell when someone works, right? You can't, there's, things happen when it comes to paying your employees, right? Some days someone has a perfect attendance. The next year they get sick, so they call in sick all the time. You can never predict or set out a paycheck to be constant, even if it's a salary, okay? Because you always have to adjust it accordingly, right? Because salary, right, it could be broken down to sick pay, vacation pay, holiday pay, whatever benefits that you do. Same thing with bill payments. You're not guaranteed to pay a whole entire amount. For example, a credit card payment, right? Well, excuse me. You may predict that you're going to make your minimum payment at least, but you're not going to pay your minimum payment every single time. You're obviously going to change your payments. And same thing with customers. You can never predict how much they can pay you, right? One day they'll pay they'll pay their entire invoice off. Next day they'll pay partial payment. And then next day they might even cause you to have to write off a bad debt. All right? So those are the things you can't memorize. But for this example, we're going to go ahead and take a look at how you actually memorize your actual transaction. So first thing we're going to do is we're going to enter in a bill. Okay, and we're going to memorize entering in this bill. So I'm going to go to enter bills, and once I get my window here, okay, it did not pop up for me. There you go. So here I'm entering a bill, and I'm going to enter in this piece of information. So I'm going to go ahead and say this is from Sinclair Insurance. Okay, so now that the information has popped up, I'm going to also indicate that this is going to be monthly insurance. Okay, so the expense account is going to be insurance expense. Okay, so insurance expense. Okay, and from here, at the very, very top of the window, here is where you actually start saving your information. Or in this case, you want to memorize your transaction. You're going to go all the way up to the top and click that memorize button. Once you do that, then you have this little memorize little window that allows you to title this, okay? So here, I'm not going to name it Sinclair Insurance. I'm going to say it's monthly insurance, okay? Expense. And then I want to make sure I add my reminders, add to reminders list. So that means it's going to remind me that I have a bill due. Other things is do not remind me or automate the transaction entry. Yes, I want to automate the transaction. So instead of reminding me, I want it to be automatically done for me. All right. How often do you want it to be done? I want it to be done every 2 weeks, twice a month. I want it done every 4 weeks. I want it done monthly because it's usually insurance expenses is done every month. And then it's going to ask you when is the next time you're going to have it done. So because I'm going to assume that this one's on January 31st, I want my next one to be scheduled to be done in February. Oops, I missed it. So February, I'm going to say the bill is always due at the end of the month. In this case, there is no 31 days, so I'm just going to do 28 just to be as closest to the next one, okay? And then number of remaining, meaning how many more monthly payments are you going to do? So I'm going to do 11. Since January is being covered, I want to start on February. It's going to remind me create one for me every single month. I have 11 days or 11 bills left that I should be receiving. And how many days in advance do you want me to enter it? At least 2 days. Okay. And I'm going to go ahead and click OK. Now, I just heard a picture just be taken, right? Now, in this case, I didn't actually validate any numbers or anything like that. That's okay. But if I exit out of this, right, no. Okay, never mind. What's going to happen is now I got to actually look for where I put that memorized transaction from. So in this case, I'm actually going to go up to my window here and go to my list on my menu and go to memorize transactions list. Once you do that, then the only one I have there is the monthly insurance expense, and it's a bill, and I'm going to double click it because I didn't even enter it in the first place. All right. Now, one thing that you can't do here is when you're in this memorized transaction, right, you can only edit so much stuff. Okay, so if I go down here and I click edit, where is it? Oh, I have to select it first, then click here and go ahead and click edit the information. It's only allowing me to actually edit or edit how I want this to be placed in here. It's not going to allow me to actually edit the actual memorized report or the actually memorized transaction itself. So in order, if you do happen to make a mistake or I forgot to add the class, right? Then what I have to do is I have to actually edit the bill itself, like open up the bill itself and say, let's say my amount here was $600 for insurance every month. That's expensive, by the way. And other things I want to say is I'm going to say monthly insurance. Okay. And then because I'm going to say that I don't have a class here, I'm going to set the class as overhead since it doesn't belong to either places. Okay. Or, well, in this case, it's probably for both San Jose, but this is probably insurance expense for the entire company itself. So it doesn't matter whether it's split between the companies or the locations or not. Once I have that, that's where I have to go up here and I have to re-memorize it. All right, and then it says monthly insurance is already there. Would you like to add the new changes would you like to add a new one or replace it or add a new one? I want to replace it. Now I get that picture taken and I'm going to make sure I add my correct dates in here. So this is for January 31st. Okay, and I'm going to say this is bill number I don't know, 5521, and I'm going to go ahead and save and close. Okay, so then the next time I have to enter this bill again, it will populate it for me automatically. Okay, with everything in there, including the 600, everything's there except for the date. The date's changed, and the information has changed as well. Okay, so these are the adjustments that you have to make is right here. But as far as everything else, it saved my transaction, including all of the information here. Okay. Other things that can happen too is if you do memorize your transactions, what happens is that, so I'm going to click no because that one's set for the next month. If I do that, what happens is every time I enter in a new bill, okay, because you use the memorized transactions, okay, and let's say I type in Sinclair Insurance, okay, there you go, Sinclair Insurance. What's going to happen is it's going to populate, oh, you must be trying to enter in a insurance expense, but there's no value entered in. It's because it's saying, well, normally when you have insurance expense, Sinclair, it's going to automatically associate with it insurance expense, okay? Now that is if you're trying to place in a bill. But because we click the automate and enter in the bill automatically for you, then you don't need to do it, okay? You just go to your memorized list transactions and click on it and it will do it for you, fill out everything for you, and it will compute it for you, okay? Any questions on memorized transactions? No. Okay. All right. Now that we completed that, if you feel like it, you're not required to. Obviously, if you're not going to ever use that again. So we talked about deleting, rescheduling, and editing each memorized report. You can do that by going into the edit menu. But again, if you're going to try to enter in more information, such as class or dates or amount details, then that's where you're going to have to go ahead and re-edit the actual bill and re-memorize it for it to save the changes. Okay, so now that we're done with that, deleting the memorized report, straightforward. If you want to delete it, in this case, I used it, so the great thing about memorized reports is it doesn't really affect any of your transactions. So the list here, so if I want to delete it, it's just saying I want to delete, I just want to delete this transaction, okay? It doesn't affect your books at all. You can simply right-click it and delete the memorized report, or you can actually come down here and delete it as well. If you delete it, you cannot undo it. So if you're going to memorize another report or another invoice or bill, you're just going to have to recreate it and memorize it again. That's it. Okay. Again, you can delete this one with no harm, no foul because it doesn't affect any of your transactions because it's just helping you fill out your bill a lot quicker, and that's it. Okay, I'm not going to delete it just because it doesn't matter whether I delete it or not. It doesn't affect me at all. Okay? Any other questions? No. So the last section we have here is going to be actually called the closing the year. So this is the part where we're actually introducing to processing the financial statements, but it's also where we actually have to close out our books. So if we remember from accounting, we had to close out all of our revenues and close out all of our expenses to the income summary. And then what happens is that to the income summary, you close that out to your equity. Okay? Same concept here. So this is step 9 in the after you completed your financial statements. So once we come here, what you actually notice is QuickBooks automatically does it for you. You don't even need to do it. You don't need to close out the books. You don't need to close out your expenses. All right? It does it for you. It even calculates your new equity for you. Okay? The only final thing that you have to do as far as calculating is to subtract or add any thing that affects your equity. So in our case, we need to subtract out any owner's withdrawals, and we also need to add any contributions or yes, contributions. But for this case, it's automatically assumed that any profit or any loss is going to be automatically reinvested into our company. And it does it through this, okay? Now again, because this is talking corporate style, instead of income summary, it's also known as retained earnings. They're the same thing, okay? So this book explains how it automatically calculates the retained earnings and it dumps it and it adjusts your equity automatically. So that's one thing that we can go ahead and be happy about, because therefore we don't have to sit there, go through every single account, close out every single revenue, and close out every single expense. It's done for you automatically, behind the scenes, okay? Now, there are a few things that you have to do when you actually start fully closing out your accounting period, all right? So again, now that we know that this step is automatically done for us, here's what we also have to complete as well if we're planning to close out our books. So first things first, of course, is to enter in any depreciation. So as we know, we don't get to take an example look in here, but it's pretty straightforward. You do a general journal entry. You're going to debit your depreciation expense account, and you're going to have an accumulated depreciation account that you credit, okay? And that is pretty straightforward. Other things here is we're going to reconcile our credit cards and bank statements, which we've done. We've seen this before. This is chapter 5, okay? Then the next step is to go ahead and look at to see if your business has inventory, and if it does, you need to adjust your inventory, which we learned in chapter 8. Okay? And then here on number 4 is we're going to look at an accrual basis of accounting and prepare general journal entries to make adjustments. So we looked at that in today's lesson. Okay? Number 5 says that if your business is a partnership, which it isn't, okay, so you're going to need to either divide the profits amongst your partners, or if you are a sole proprietor, you're going to have to make a general journal entry to close out the owner's draw. Okay, and that's what we're going to be doing next, is closing out the owner's draw, so we could be completely done with our books. Then step number 6 says right here that you're going to run reports. So again, we're going to create your financial statements. And then number 7 says print out and create PDFs, blah, etc., etc. Step number 8 is going to be back up your company file. Okay, that's very important. Then step number 9 says we're going to close out the given period and lock it up. So by choosing a closing date, which we skipped, we barely went over it in chapter 12. This was the very, very, very beginning. So if you can remember 4 weeks ago, we barely talked about the closing date. It was one of the things that we had to set up when we talked about the initial setup, is that you're supposed to set a closing date. And I also briefly mentioned that we have to skip this setting the closing date, because if we do set the closing date, our books would be automatically locked up. Okay, so we're going to talk about that in a few moments, about what a closing date is and what it does. And then lastly, number 10 is to clean up the data file by deleting all the transactions and etc., etc. So that's basically their version of the accounting cycle. Okay? Pretty straightforward. We've already done half of these things. We've seen them before. Okay? So now we're going to be doing closing entries for sole proprietors. Okay, any questions in regards to these 10 steps of what you have to do to close out your accounting period?
No.
Okay.
No, I'm okay.
Okay, good. So we're going to take a look at 2 more things. Closing out the books. Okay. Actually, not closing out the books, but closing out to the equity. So here it shows you 2 things that you can do if you're a sole proprietor in the partnership. But right now we're only focusing on sole proprietors. So this is where we have to make a journal entry to adjust our owner's draw account. Okay, but first, before we even do that, we need to also create the owner's draw account. So we're going to go ahead and write a check to the owner so he can go ahead and withdraw from the company. Okay? So again, we're going to go ahead and write a check to Mr. Vern Black, because Mr. Vern Black is the owner of the company. So here we go. He was there. Vern Black doesn't exist. That's okay. We can enter him in, and he's going to be a quick add, and he's going to be an other person. Okay, so he's the owner of the company, and he's going to take owner's draw. Okay, this is fine here. So again, the account is going to be owner's draw. Do we even have an owner's draw account in here? I hope we do. Owner's draw. Owner's oh no, we don't have owner's draw. So owner's draw. Okay, and because we don't have that account, we're going to have to set it up. Again, an owner's draw account is going to be an equity account. Okay, because essentially we're taking away from the company, right? And then I'm going to go ahead and click continue. So now it's going to say you need to set up account number, description, and whatnot. I'm going to do that later, so I'm going to go ahead and click OK. So here you go. Now I actually have an owner's draw account. And I'm going to say for the amount of $1,000. Okay. And I'm going to go ahead and say owner with draw from company. Okay. And checking the date, making sure that it's the 31st, and I'm going to click save and close. Okay. And keep number, or actually I have to change it. So this check number is going to be I don't know, 351. All right, save and close. So now that I recorded the owner's draw, this is now where I actually have to go to my company file again, and I need to make my general journal. Because now I have a owner's draw, and I need to take it away from my actual equity account. So again, first things first is you need to make sure that you have it recorded as a general journal entry. Okay, so again, here I have 2019 2. That's inaccurate. It needs to be 2019 3. And then again, we're going to go ahead and debit our owner's equity. Okay, we don't even have an owner's equity account. Okay, instead, I think it'd be, let me just type in equity. Do we have just an equity account? And we do not. What did we use for this one then? Let me go ahead and double check what the title is for what it's called on the chart of accounts, so I can accurately take it out of the correct account. So let me see. Equity. It is called opening balance equity. Okay, we have capital stock. We have retained earnings. Okay, so it's going to be opening balance in equity is going to be the equity account. Or in this case, capital stock is our equity. Okay, so again, because this is looking at a corporate standpoint, this isn't an actual sole proprietor. So again, just know the difference between what they are. Owner's equity is meant for sole proprietors, partners' equities for partnerships, and then corporations is usually stockholders' equity. So I don't understand why they don't have like a regular equity account. They should have one instead of capital stock, because capital stock should be underneath the actual heading, which is stockholders' equity. So for this case, I can't do it because I shouldn't be taking it from capital stock. It's actually supposed to be from an actual equity account. So in this case, I'm unable to do it, but looking at the actual example here in the book, it should be you're taking it from the owner's, you're going to take it, you're going to debit your owner's equity, and you're going to credit your owner's draw. And that's going to adjust your total equity at the end of the day. So in this case, my equity should reflect, it should be the total of $10,000. Okay, because that's how much the capital stock is. So in this case, I would have to actually create an equity account because, again, this is corporate. So it's a little slightly different than what it is for a sole proprietor. Okay. So that is it for that one. Closing out partners is pretty straightforward. If you have a partner's account, which in this case, we're not going to look at that. We're looking at... we should be focusing primarily on the actual sole proprietor itself. Okay. Any questions in regards to closing out the equity accounts? Okay. Okay. Yeah. So sorry about that. There's always that one time that I had that problem that never goes through, and it's this one. Okay. I always keep forgetting. So here, if there's no questions again, then we're going to go ahead and look at setting the closing date. Okay, so the closing date is also, in other words, to lock up the data file. So obviously you have to be admin in order to set the closing date, because ultimately admin is the one that's going to be the one who's has the accessibility, or has access, has access to be able to go through files that are locked up. Okay, they're the only ones that can do it. Admin or the primary accountant. No one else on any user's levels should have access to be able to go through any closed out files. So in order to lock it up, you're going to choose a closing date. So once you've done everything in the steps and you're reached step number 9, where you need to start closing up everything else and set a password to lock it up for good, what you're doing is you're locking up the data file, so no one can add in, no one can delete, no one can do anything except for the admin or whoever locks up the file. So in order to do that, you're going to go to your edit menu and you're going to go to preferences. And the first thing you're going to go to is your accounting section. And then underneath you're going to go click company file. Okay. Then at the very bottom, you have this little section that says closing date. And then of course you have set the closing date right here. So by pressing this is where now you get this little window that allows you to set the closing date, and it allows you to create a password so you can lock up your stuff for good. Now for this one, I'm going to choose the closing date. Obviously not something that's going to be fairly recent. I'm going to go ahead and lock it up. I'm going to lock it up this year on the 31st. Okay, of this year. So that means I still have time to be able to enter in whatever I need to enter in. Now the next thing is you're going to do is you're going to have to set a password. Now usually it's going to be anything that's relevant to the file itself. So especially if it's your company, usually it's your company's name and the date would be a good password, so then you can always access it at any time. But for this example, they choose A, B, C, 1, 2, 3, and 4. And then of course they tell you to type it in twice. So A, B, C, 1, 2, 3, 4. And then once you set the password and you click OK, then when that date comes, when January 31st comes, and you're trying to access the file, it's going to say, sorry, QuickBooks has locked up all the files. You cannot enter anything. You cannot do anything. All you can do is just view the files. You can only view the transactions. So, of course, in order to be able to change the files, you would have to enter in that code, the ABC 1, 2, 3, 4. You're going to have to enter that in to give you admin rights or privileges to be able to modify and edit the information. Okay, so that's how you go ahead and set the closing date, is through that window. Okay. And as far as that is it for chapter 13. Any questions? Okay, let's go over the review questions. Okay, so question number 1. Which of the following tasks does QuickBooks perform automatically at year end?
I got C for this one. Me too.
Okay. Yes, C is the correct answer, right? It does not create adjusting journal entries for you. That's something that you have to either memorize or you actually have to enter it in yourself. It doesn't identify expenses that are too high in comparison. No, it doesn't do that. Again, it's pretty blank forward. Whatever you enter in is whatever QuickBooks is going to believe. And then lastly, D says automatically backs up the data file. At year end, it doesn't do that because you can set requirements of how often you want to back up your file, but that has nothing to do with the year end adjustments or anything like that. So C is the correct answer. Yes, that it will automatically take the retained earnings and account for it in for the year. Okay. Number 2, entering a date, in the closing date field um, accomplishes which of the following?
I said C. C also.
Yes, right? That's all it accomplishes. It just locks it up. There's no real meat and potatoes to this. It's just to lock it up. That's it. It's to lock up for anybody to just add in any transactions, especially so the reason why we do lock it up is so that it prevents from fraudulent charges, fraudulent things that happen, right? People go in after hours and entering in data. They write themselves checks and stuff like that. That's the reason why we lock it up. Okay. Number 3, okay? Voiding and deleting transactions both do the following.
Well, I have C.
That's what I have as well, but
I feel like more
think
than
it
C
might-
apply. though.
I think it might be D.
Okay. Now let's go over the answers then. Okay, so A, keep a record of the date, number, and was that the details of the transaction? Okay, that's good. That's voiding. Correct.
Right.
That's
Correct.
They take it, but not both. So
Exactly.
I was like, that was a tricky one.
Yes. So that's what this question is asking. It's asking what do both of them do? Okay?
Right.
So the underlying word that we're looking is that what can they both do? So we already verified that A is meant for just only voiding. Okay? Deleting doesn't do that. Deleting gets rid of the whole entire transaction. So then
Voiding is B.
yeah, B, completely remove all of the information. Yes, that's true. Does voiding completely remove all details? No, it doesn't. So C is the correct answer. It does zero out and the debits and credits. Yes, it does. So when you void a transaction, it undoes it. It zeroes them out. It's as if the transaction never happened. Deleting it completely gets rid of it. So you're gonna zero out the account anyway. So C is correct. All right. Number 4, to make an adjustment to items as well as their associated accounts, you have to create what?
A.
Oh,
I say A.
I said
Okay.
C.
All right. Okay, so we know for sure fixed asset isn't an answer, and we know for sure memorized transaction is not an answer because where the main question is it's asking you to make adjustments to items. Okay, now notice this, the word items.
Items, then it's $0 check. So
Correct. So notice that items in this context is italicized. So the emphasis is on items. General journal can only do accounts.
counts.
$0 checks can do both accounts and items. So make sure you know that because you can use a $0 check to make a general journal entry for adjusting accounts as well. But we just don't normally use it for that. You have a general journal to go ahead and do that. So the correct answer is C. All right, last but not least, at the end of the year, you should perform which of the following?
Oh, I say D, all of the above.
Yeah, I first said C and then I went back and I was like, we should technically be doing all of it.
Correct. D, you have to do every single one. So yes, you have to complete the depreciation entry. So this is all year end when you need to do all these procedures. So go back to that one page and look at all those 10 items that you're supposed to do at the end of closing out your accounting period. And all 3 of those items are on there. Okay? So again, D, all of the above is correct. Okay. Well, I mean, we still have at least half an hour of class left. So I'm going to give you guys a choice. Do you want to start answering the remaining section of the certification, or would you rather just